As you guys can see, I am in such a good mood. As the title suggests, my stock is up 30% in less than a year, people. Yep, preach. That means if you guys invested £1,000, you get £300 back. And if you guys invested £100,000, that means you get £30,000 back. Profit. Obviously, it's excluding like tax deductions and fees and whatnot. But you guys get the point. It's a huge profit nonetheless. This has got to be at least like 10 times better than any savings account within the UK, people. And probably across the world as well. Keep watching this video, people, to find out what I noticed about JD stocks that a lot of people didn't pick up on last year. And what I'm going to mention towards the end of this video is a secret thing that I like to do that makes me find more stocks like sort of JD Sports stock. You guys definitely want to watch this one.
You know what you're watching. DS Learning Finance. Whoa.
Now, obviously, you want to make sure that your company has the bait stuff, the easy to mention stuff. You know, like consistent growth in profits and revenues over the years. You want to make sure that they're able to easily cover their debts and basically financially sound, which is what every investor should expect from a company that they're really serious about investing in. But there's this main thing that JD Sports does that a lot of other companies don't do. And this is probably the thing that made me notice them the most. From a first glance, it seems like JD Sports likes to take over companies for fun, people. For real, it's like they have this ability to find a competitor, undervalued competitor, take it over, so they own it, and then make it into an ally for themselves. But yet, they're able to still see the potential in that competitor. And it's actually pretty incredible when you mention it. Like, they have taken over 2 companies, guys, in the last year. Word. Like, they bought Finish Line, a company that's based in the US, has 556 stores in 44 states, and basically is helping them branch into the US market. Just a little trivia for you guys. There's 50 states in the US. So out of that 44 states, which is 88% of the US roughly, they have 12 to 13 stores in each state. That is crazy amount of coverage for JD when you think about it. It's perfect for breaking into the US market. They also bought Pretty Green very recently, which is a clothing brand founded by the famous Liam Gallagher. And now, as we speak, they are in the process of acquiring Foot Asylum, which is a main competitor of theirs in the UK. They basically have like 70 stores across the UK, which is quite a lot of coverage when you think about it. But yeah, like, and it hasn't even been a year, guys. It hasn't even been a year, and they're able to almost take over 3 whole companies. That is a big deal when you think about it. This is the main thing I noticed about JD stocks. They are acting like a big company, buying out their competitors left, right and center, guys. But yet they're still a FTSE 250 company. So they have that capacity to still grow some more, which ultimately I feel has put me in this situation now. I also noticed that JD Sports has an inner ability to perform consistently well over a suspended period of time, especially in this current climate, where their competitors, big time companies, are getting eaten up by this fashion market. Companies like Debenhams, who are actually going through administration right now as we speak. But yet JD has the ability, they have the site, they have the know-how to perform consistently well, even during those dark times. That's such a big feat and such a telling sign that this company has what it takes to literally progress forward. And as for my secret thing that I said I was going to mention, it's best summed up by one of Peter Lynch's say, who's a successful and world-renowned investor and fund manager. And it's basically simple. You should invest in the companies that you believe in to such stage where you actually buy their products and services on a consistent basis. Okay, maybe it wasn't those words exactly. I don't know what he said, but it's along them lines, innit? Ultimately, it's telling us to invest in companies that we like to use. Whenever I'm getting trainers, guys, there is one store I go to first. My favorite store. And it's a company called Size. It used to actually be JD Sports Fashion, believe it or not, but it's now Size, and it's because they sell trainers that are just so unique, but yet are so stylish. So you guys can imagine how gobsmacked I was to find that JD Sports Fashion owns size. Bruh. Relating this back to Peter Lynch's saying, you want to invest in companies that you like to frequently use. Chances are, if you like to use it, there are tons of other people that like to use it too. But it just didn't stop there for me. I like to take it one step further. You know me, guys. I like to do my in-depth analysis, like the code red level 10, like proper diving deep. When I was first researching JD stocks and I was out and about in the city, I would make sure to pay the local JD store a visit. Not to buy anything majority of the time. And it wouldn't just be that JD store, it would be other JD stores across the UK. And I can honestly say, guys, I was impressed. It was generally to look at how busy the store was. Like, how many people are queuing up to buy something? What is the age group, the majority of the age group in the store? Things along that nature. And what was shocking was that each time, well, majority of the time I can say, it was packed out and thriving, guys. I was so impressed, and it sort of reinstated in my head the potential that this stock has to grow, which is essential. And ironically enough, this is one of the things I used to do for Greg stocks as well. And you guys know how well Greg's is doing right now. Go across the UK to Greg's. Them times I was gonna eat something, because you know me, I like my cheeky Greg's. But anyway, yeah, I would always go to various types of Greg's, and notice that they're always packed out at certain times. And that just reinstated in my head that, yeah, this company must be doing well, because obviously they're selling majority of the time that I'm there. So it seems to clearly work for me, maybe for you guys too. And that's it, people. That's the end of my video. But I've got a question for you guys. If you're in my situation, 30% up with your shares, what would you do? Would you sell all of your shares and duck out basically? Or would you take it one step further and maybe potentially even enter and re-enter again when the share price is lower? Or would you even just not do anything, just literally as it is, keep your shares, not even think about it? Maybe even buy more shares. I know which one I would do. But which one would you choose, guys? Let me know in the comment box below. It's your favorite YouTuber, guys, Dami Solari. I talk about stock market investments, property investment, financial management too, giving you guys that consistent content, you know? Before you guys can go about doing whatever you're going to do for the rest of the day, say it with me. Like, subscribe, and share, people. What? DS Learning Finance. Whoa. Bye, guys.
Whoa.